sectors on a daily basis. What is the screen telling you right now, Anshul?
Morning, Aisha. Pleasure to be with you. This is an interesting market to the extent that last year we saw a broad-based rally, and that was a nice setup for a consolidatory phase in the markets, which has played out so far this year. The macros haven't disappointed. That is on the downside. They've been very adverse for the markets. And as a result, we've seen that there has been a very narrow range in which the markets have moved. And particularly on the broader markets, you've seen only a few stocks do well, and the broader, larger space actually crap out really. That space did very badly. Now, we are at a phase where earnings will really give fuel to the markets. In the first half of this year, we've seen, that is the first half of the calendar year, we've seen that there has been somewhat of a sort of a disappointment on earnings. And expectation is that going forward into the season, that is the festive season, earnings are likely to turn around. If that plays out, we will see that reflecting in the markets as well. Also on the macros, really the downside has broadly played out. From here, news can only be. Even on that count, it's likely that we'll see positive news moving forward. Take all of that together, and it's a nice setup for the markets. Valuations are reasonable as compared to where they were, say, 6-8 months back. Earnings as also macros look positive from here. And as a result, one has to be slightly more constructive than one was, say, 6-8 months back on this market. That's how we are positioned for this market at the moment.
Okay, Anshul, this is Harsh also joining in, trying to get a sense. So of course, you're quite positive with regard to the market as a whole. Are there specific pockets that you're liking? Is consumption a theme you're playing? And if so, how?
Hi, Harsh. So if you look at what's really happened on the regulatory front, with tax cuts coming in, with also government giving a fillip to liquidity in the markets, it does look like discretionary consumption, which has been slightly weak in the run-up to the festive season, that should turn around. Even commentary from many of these discretionary consumption companies seems to suggest that we are on the anvil where we have a turnaround in this space. You take cables and wires, you take electrical goods, fast-moving electrical goods. You see that there is a general positivity there. Even on the FMCG space, what we are hearing from companies is that while there was a one-time impact because of GST cuts, but they are hopeful that there is likely to be a turnaround as we move into the festive season. Now, all of this suggests that this is, as you mentioned, this is a space which is attractive. Aside from this, if there are two sectors which see significant tailwinds in India, I would say that those are one, defense, second, renewable energy. We think that there is government push on both sectors. The market is large. The opportunity ahead of us is quite substantial. And we're really at the tip of the iceberg as regards the opportunity playing out going forward. So these two spaces look quite interesting, banking and finance as well. And then, of course, capital goods. So take all of these sectors, and here you can find tremendous opportunities. Of course, the opportunities will be stock specific, so you'll have to do your bottom-up stock picking. But these are great spaces to be in.
Okay. And Anshul, hold on to that thought. We'll definitely ask you what to stock pick within defense and renewables. But let's talk autos, and the wholesale autos numbers in September are likely to clock in a healthy year-on-year growth across segments with, of course, the festive demand, the GST cuts and rural tailwinds as well.
Somewhat of it's a volatile business, and it doesn't have the same economics as the CV business. that really sort of camouflages the true value of that business and the true profitability of that business. If that business was to be demerged on its own, it would have been a very attractive business to list separately and own, of course, for individual investors. In which case, our calculation suggests that JLR business would have become kind of free, because the company today, as it is listed, reflects only the value of the CV business. But now the joker in the pack is the Iveco acquisition. And one doesn't know how that should play out, given very little knowledge of that business. As also, it's a business in the international market. It doesn't cater to the Indian market so much. As the company itself suggests that it will take 2 years for this business to kind of stabilize and to start contributing. Now the matter is, I mean, it's not so clear as to how the CV business will list and what will be the economics of that business. As a result, while this is an attractive proposition, but one will have to see that merger of Iveco before taking a call on the business, is our view.
Okay, Anshul, hold on to that thought. The Nifty implied open absolutely flat right now. We'll take a very quick break. Come right back in a minute.
Tata Capital is the flagship financial services company of the Tata Group, with a legacy of 150 years.
Not wrong, has bought in a stake. Now we'll get you the details of all of those blocks in just a few minutes, but just trying to understand whether on the fundamental side, Anshul, some of these NBFCs, would they start to look interesting at this point? Especially given that the MFI cycle may be waning, in terms of the adverse MFI cycle may be waning. So if I can put it that way. Also, we had there's been an analyst meet which MK has had with IDFC First, where they've indicated that they are looking at a solid tailwind of growth going forward, and some of the woes with regard to asset quality are behind. Would some of the lenders really look interesting? Also need to bear in mind that there's going to be a repo rate cut. So likely, maybe this week, at least there's a 26% chance of that, is what analysts are penciling in. Would all of these factors make lenders attractive for you at this point?
Actually, lenders, particularly NBFCs, look interesting at the moment. If you go back 3-4 years, in fact, you have to look at it in context. Go back 3-4 years, and you will notice that RBI was consistently tightening norms on this segment of the lending community. And as a result, the growth of this segment was stunted. And then fast forward to the last 6 months, and you will notice that, or 6 to 12 months, and you will notice that RBI has been easing the screws. And what that tells you is that there is a realization that this is the last mile of lending to the economy. And NBFCs reach where banks actually cannot reach. As a result, there is a need for easing regulatory norms on NBFCs so that they can lend to the last mile. Clearly, some of that has started to pick up. In the festive season, it looks like particularly auto lending from this space, as also consumer durable lending from this space should pick up. And in general, even housing finance, that space looks quite interesting. In general, NBFCs are an interesting space to look at. And there may be tailwinds for the ensuing future in this space, both on the AUM front as also on profitability.
Absolutely. Anshul, before we let you go, I just want to get back to the point that you were making. Keep it stock specific. Defense, renewables, those are the two sectors that you're liking. And, Kunal was just flagging off that it's no more about BEL. Look at something outside of the large cap list. like a BEML as well, which is looking very strong. Anything that you specifically like within defense or renewables?
Aisha, I wouldn't take names, but let me just tell you, I mean, I'll give you a hint. I was in Delhi and I met with one company over there. And that company is in the business of renewable energy, EPC space, and is looking forward towards becoming a broad-based renewable company. Now, this company had its AGM on Sunday, and the kind of commentary that they've given in the AGM seems to suggest that they'll double revenues in the current year, and then they'll double revenues in the next year over the year-ending revenues of this year. So that is the kind of tailwind we are seeing in this space. And using this capital, they will grow to become a holistic sort of renewable energy company, moving away from just solar towards green hydrogen as also other renewable spaces. Now, I mean, the valuations in our judgment don't reflect the kind of upside that could play out in numbers. And same for certain defense companies. We've heard of a lot of the PSU names, private names, which have done very well. But there are certain companies which have hidden dynamics in the sense that they have autos businesses combined into the defense business. And as a result, economics of the defense business don't come to the fore. In defense, of course, a lot of the upside has played out. But one will have to, again, be stock specific here to look at opportunities, which definitely exist at the moment.
Okay. All right. Pre-open, where the early rates are indicating a positive start, 0.6% higher on the Nifty. And of course, we'll wait for those rates to settle to fully understand how that's playing out. I'd want to pull up something like a Kotak Bank, because very interesting note coming in from Morgan Stanley, which I read today morning. Want to understand how that one's reacting. Well, absolutely no reaction on that one. So that's on Kotak. I also want to pull
That's
up.
happening because of the expectation